Ladies and gentlemen, boys and girls, we have a massive week coming up in the stock market this week. We have a lot of companies reporting. Some of the biggest companies in the world are reporting earnings, so we have to break down a lot. I mean a lot in this video. So sit back, relax, take a sip of your coffee, hit that like button, subscribe, and don't forget to get your 15 stocks from Moomoo and your 12 stocks from Webull. All those are linked down below. Free money, guys. And with that being said, let's dive into the video. And by the way, where are you guys watching this video from? Let me know in the comments. Are you in the US? Are you abroad? Let me know where you're watching this. And if you're in the US, let me know what state you're watching this video from. So right off the bat, let's break down the markets here and talk about kind of what's been going on, what happened on Friday. Then we're going to get into these individual stocks. And let me tell you, there's no joke. There's 25 companies this week that are significant companies that are reporting earnings. So honestly, I can't fit them all in this video. So should I make a part two? What do you guys think? Should I make a part two? I don't know. But in this video, we have 10, 11 stocks, and all of these are really big companies. So before we get into that, let's take a look at SPY. We'll break down Triple Q and see what's been going on. And you guys can see here, SPY went up 2.4% on Friday, as Triple Q on the same day went up about 2.3%. And what we're noticing is an inverse head and shoulders on both of these, on the 4-hour chart at least. And you can see if I zoom in a little bit, look at this. On Friday, SPY broke out of the 180 SMA, which if you're looking at this 4-hour chart, guys, it hasn't done that since when? The middle of September, where it barely broke out. And before that, it was the end of August, when, the last time it broke out of there. So we're finally starting to see a little bit of, it's peeking its head out of that moving average. We're starting to see a little bit of upside. We're not fully there yet, but if we start seeing a break above, let's say 380 this week, if this starts going 390, we start moving that direction, this right shoulder and the inverse head and shoulders could complete anywhere from, I'd say, $405 to about $415 a share. That gives it a decent amount more upside from this point. So heading into this week, guys, my alert on SPY is at 380 on the upside. Upside here, which was resistance, the peak here from the beginning of this month of October. So keep your eyes on that point moving forward. And for Triple Q, let's pull it up. This is right at a similar point. But the only difference here is the fact that this hasn't yet broken out of the 180 SMA, when again SPY's peeking its head out of there. This hasn't quite done that quite yet. And it's right by 280 and 285, which is two big resistance points for Triple Q. So if this, during this week, if we get any direction past 280, 285 especially, just know that's going to be very good for the bulls. We're going to be breaking out of the moving averages, recent highs, and the right shoulder could get us pretty dang far in this, in this pattern here. You guys can see back in the middle of September, 315 is where Triple Q was at, which is a lot higher than where it is right now. Let's put it that way. And if it breaks 285, that is where I think it could be going. If we get some sort of relief rally, extended relief rally in the very short term here, we're talking, 7, 8, 9% higher from where we are now. And who knows, if these earnings come in hot from these companies that are reporting, that we're going to get into in this video, a lot of big tech companies, it could spur a rally. It could spark that rally. And, we could be seeing that upside. So what do you guys think? Let me know your thoughts in the comments as always. And with that being said, guys, let's just dive into the meat and potatoes of the video and talk about some of these companies. We have 11 companies that we have to get through in this video. And the first one is none other than Microsoft. You heard that right, guys. We have big tech reporting this week. We have Microsoft, Google, Meta, Apple, Amazon, and a bunch of other companies. So let's just get into it. Microsoft went up 2.5% on Friday. And what are you noticing? And let me just make this clear here to you guys. You're going to notice this on a lot of these different stocks that we're going to talk about today. You're going to notice an inverse head and shoulders here on the 4-hour chart, kind of like what we saw on SPY and Triple Q. You're going to see that on a lot of these stocks here that we're going to break down. So, overall on Friday, it went up 2.5%. We have earnings coming up this Tuesday on the 25th after the market closes, right? And if Microsoft starts peaking out of, let's say, technically here 245 to 250, really if it starts breaking 250, not only is it going to break the 180 SMA on the 4-hour here, but it's also going to take the highs out from the beginning of October right around 250. So that's a good spot. That'd be a breakout spot here for Microsoft, and they're expected to report average EPS of $2.31 on average revenue of $49.73 billion. So watch out for that, guys. Keep those numbers in mind. And of course, these are just average estimates. Who knows what they're actually going to report? But again, let me say it one more time. EPS, $2.31. Revenue, $49.73 billion. And just realize this stock is down, 30-40%? Maybe not 40. I'd say, let's do a guess here, 33% from all-time highs. Let me see if I'm way off on that or close. Let's see here. So all-time highs were 350. We're down about 31%, 31%, so pretty close there on the guess. So realize it is down a ton heading into these earnings, and I feel like a lot of selling pressure in general has just been coming in on these big tech stocks since they last reported. You guys can see Microsoft, last time it reported, just shortly after, it was at almost 300 a share. So it's already down $60 from that point, 16-17% in just the past 2-ish months. So a lot of the bad news could be priced in already. Just saying. I'm not saying that's for sure, but if they do come in, surprise, guidance looks good, we do start breaking that key point at 250, we might get a little run here on Microsoft. Totally possible. Same here with Alphabet, also known as Google. They report earnings this week, and they're down from their last report. Let's see here, probably 20%. I mean, last time they reported, the stock was at roughly 105, then it ran up to 122 shortly after the report, and now it's at $101. So what is that, 16%? Yeah, 16-17% drop right there in just the past 2-ish months, a little over 2 months. And they report, I believe, on Thursday. Or no, I'm wrong. Wow, I should have knew that. I should have known that, guys. They report on Tuesday. After the bell. And overall, they're right around $101 a share. They went up 0.9% on Friday. Not too bad. And they're right by a big resistance. Not only the high from the beginning of this month, but also the 180 SMA here on the 4-hour chart. And like Triple Q, SPY, Microsoft, we kind of do see a little bit of an inverse head and shoulders on Google as well. You guys see that, right? No need to draw it out, but you guys see it. So they're looking to do on average EPS of $1.25 on revenue of $70.68 billion, which would be up, not too bad, 8.5% year over year. So you guys know this is my biggest individual stock. So when these earnings come out, it's gonna fluctuate my position pretty heavily. Let's put it that way. And I know a lot of you guys own Alphabet as well, and it's one of those holdings that out of big tech for me, I don't own I guess I do own every big tech stock if you're looking at an index or ETFs that you own or index funds, right? S&P 500, which I personally own. You're going to own all the big tech stocks, but individually, I don't own all of them. But when I'm looking at the big tech stocks, I think Alphabet is the best one long term for me for the next couple of years, looking at valuation and just overall the thesis behind it. I'm not going to get into that in this video, but I think Alphabet is a great company, seriously. And I'm looking forward to these earnings. Let's put it that way. And I'm definitely going to do a video on Google or Alphabet, whatever you want to call it, when the earnings actually come out. I'll do a dedicated video to that, and I'll probably do a ton of dedicated individual stock videos this week because of all the earnings that are coming out. So make sure you guys subscribe. You see that red button down there? Make sure to subscribe. Hit that notification bell so you don't miss any of the content. So Alphabet this week, they're going to be doing $1.25. That's the estimate on revenue of $70.7 billion. That'd be up again about 8.5% year over year. Not bad. Meta is another one. Let's pull that up and see what's going on with Meta. Meta is obviously in a downtrend, and I'm not really seeing an inverse head and shoulders on Meta. Maybe kind of on, it's kind of like a lopsided one. It looks, honestly, it looks just more like a downtrend at this point, which it is, and it's pretty close to the lows. The lows from about 10 days ago were right around $122. Now we're at $130 on Meta. And on Friday, believe it or not, everything pretty much went up. We had an awesome green day on Friday. Meta was one of the only stocks, at least that I was tracking, that I own, that was down 1.2% on the day. And honestly, it's not that big of a deal. I mean, the very short-term market fluctuations, those really only matter to traders. If you're a long-term investor, right, it doesn't really matter at the end of the day. But it's interesting to see that the divergence here with Meta. But they report this week a little bit later in the week, the 26th, which I believe is, well, that's only Wednesday, right? Not much later. On Friday, we have a bunch of energy companies that I made a video about yesterday. Go check that out, guys, on the channel here. I think I titled it "Massive Move Coming for These Stocks," because a lot of those setups in the energy stocks, they look good. Go check out that video if you haven't done so already. So Meta is on Wednesday after the bell. Their average EPS is looking to be about, the estimate here, $1.89 on revenue, estimated at about $27.41 billion. And we all know Meta's going through a lot right now with the change, with Apple, the metaverse. They're putting a lot of money there. They're losing a lot of money from that privacy change, which, you guys probably know about that at this point. And that's been sending the stock through the toilet. I mean, and to be honest, as a long-term investor, that's kind of what I look for. I like to see companies that are still good companies, in my opinion, that aren't going to go bankrupt. They're out of business, because if they were, you wouldn't look at them anyway, right? So you want to look at companies that are solid companies still, that are going through a very tough time in the short term, that is causing a lot of people to sell out, the stock to collapse. And I think Meta, this is one of those times, to be honest. I think Meta is going to bounce back. If we're looking 3-5 years out, there's no way it doesn't bounce back in my eyes, in my opinion, which is why I've just been nibbling a little bit, inch by inch, as it's been coming down. And I'm just going to be holding, guys. And for sure, I could be wrong. There's no doubt I could be wrong. I've been wrong in the past. We'll see in a couple of years. I'm not judging this on what happens in the next 3 to 6 months, 9 months, even 1 year. I want to let it play out. And I believe, it's going to do well for me. And I know a lot of you guys own Meta as well. And kind of going back to what I said with Alphabet, these are the two that I'm in, I'd say, the most heavily right now in terms of big tech, for sure. Meta and Alphabet. And I've told you guys that before on the channel, but for all the new viewers out there, these are the two that I'm liking the most right now, especially Meta. If you're looking at valuation, Meta is definitely the cheapest by far out of all these big tech stocks. Ask anybody. They'll tell you that. I mean, depending on who you're talking to, of course, but that's my opinion at least. So Meta is one of those that, again, it's going through short-term pain. Overall, long-term, I think it's going to bounce back. That's kind of how I'm looking at it, and I'd love to know your thoughts in the comments down below. Apple is another one. We also have Apple, guys, this week, ticker symbol AAPL, and this one has a clean-cut inverse head and shoulders. Pretty nice, actually. Look at that. You can see here we have the left shoulder. Boom. You guys see that. We have the head right here, and we have the right shoulder right there. And this is pretty much right on the verge of breaking out. I mean, we took out the 50 SMA a couple of trading days ago. We're right at the 180 SMA now on the 4-hour chart. If I put my alert at 150, guys, and it breaks that point, and especially if earnings are good, there's no doubt in my mind Apple's going to run in the short term. We could see this thing maybe go to the mid-high 150s, right? If that point breaks, 165. I mean, look at this chart here. There could be some headway here on Apple with earnings coming up. And again, earnings are coming up. Anything could happen here. Keep that in mind, guys. Do not try and gamble. I'm not telling you what to do, obviously, but with earnings, do whatever you want, honestly. But with earnings coming up, it's going to be a tricky time. Let's just put it that way. And, trying to gamble on stocks, I've tried to do it before. I've told you guys years ago, I did that and I lost money. Did it a bunch, actually. Made some money, lost some money, and overall, I'm just like, why am I doing this? And ever since then, I haven't gambled on earnings. But again, you guys do you. But I'm telling you, it's going to be a rocky time here for a lot of these stocks. And we could break out depending on how these earnings look. But again, it could go the other way as well. You got to realize that. So average EPS estimate for Apple is $1.27. Average revenue estimate is $127.57 billion, which, believe it or not, actually, wait, no, I'm reading the wrong line. Sorry, guys. Scratch that. That was for the next company. The revenue for Apple is going to be estimated $88.9 billion. I read the wrong line because I have a bunch of notes here on the iPad, guys. I'm sorry about that, guys. But anyway, Apple, again, EPS, $1.27, revenue about $89 billion, which would be up 6.6%. Let's see what happens, guys. Let's see what happens with the stock. Again, I told you, $150. If that breaks, 158, 165, that is where we could be moving. That's what the chart here at least is telling me. And if you have any objections, again, drop them down below in the comments. So Apple's looking pretty good, pretty solid here in my opinion. Amazon is the one that I kind of spilled the beans a little too early on. Amazon's average revenue estimate is $127.57 billion, which would be up 15% year over year. Not too shabby if you ask me. And they're going to be reporting on, what day is this? The 27th. So that is on Thursday. I believe Apple, did I say Apple? They were on Thursday as well, right? Let me double check here. Yeah, I believe they're on Thursday as well. So we have Amazon, and I forgot to say this about Amazon. EPS is looking to be about 22 cents on average. And if I clear this set really quickly, you guys can see, like a lot of the other stocks, SPY, Triple Q, we have an inverse head and shoulders on Amazon as well. You guys see that left shoulder? We got the head right here. Then we have the right shoulder with earnings coming up. We're right by the moving average and the highs from the beginning of this month. Let's see if we make a move on Amazon. And we also have the two giants here, Visa and MasterCard, reporting this week. And I'm going to wrap these two up in the same little category here because, I mean, they're pretty much the big dogs going at it, competing with each other at the top. So we might as well talk about them both here. Visa went up 1.7 on Friday. We don't really have an inverse head and shoulders on this, but it's pretty much right at a very key level right now. If you guys notice here, Visa bottomed in the beginning of March, middle of May, middle of June at about $190. We pretty much held that like clockwork. And now look at us. We're at $190. And we fell under it a couple weeks ago to 175. So now we're actually trying to fight back over $190, in other words. And that's also the 180 SMA resistance on the 4-hour chart. So needless to say, it's got to break 190, 195. And if it starts doing that with earnings coming up, that'd be very good for the bulls. They're reporting here on Tuesday on the 25th, 2 days after I'm filming this video. And Visa's EPS is looking to be $1.86 on revenue of $7.56 billion estimated, which would be up 15.2% year over year. That's if they do $7.56 billion. And we also have, like I said, MasterCard, whose EPS estimate's looking to be $2.56 on revenue of $5.65 billion, which would be up 13.3% year over year. And the technicals here, Visa and MasterCard, I mean, they look pretty dang identical. Look at this. MasterCard is also right at a key resistance at about 305 to $310, which is where the stock held in March, in May, and in June, early July, into the middle of July. You guys see that, right? So if MasterCard starts breaking 310, 315, that is where it could really start taking off. We're not there yet, but that's kind of what I'm thinking right now. So I'm going to set my alert at 315 on MasterCard, and going back to Visa, I'm going to put my alert at, let's put it at $195 a share. That should work. Mark is at or above $195 a share. So watch out for Visa, MasterCard, and we also have Shopify, which has just been destroyed, guys. This stock was at what? $400 a share, and maybe not 400. Well, at one point it was before the split. But now that it's split 10-1, right? It is at, or it was at $176, which was the all-time high from the middle end of November of last year. Now it's at $30, guys. It is down probably 95%, maybe not 95, 90, I'd say. More like 80, 85. All right, that wasn't a good estimate, guys. But pretty close, right? 85% is what it's down. And if we look here on the 20-day, maybe on the 4-hour actually, if I zoom in a little bit, you'll be able to see it. What do you see right there, guys? An inverse head and shoulders. You guessed it right. So if this breaks 30, 32 bucks a share, we're pretty much right there. Mid, high 30s. Could be right around the corner. So average EPS for Shopify is looking to be about negative 10 cents on average revenue of $1.8 billion. So let's see, guys. I mean, year over year, for sure, the growth on this company has slowed down. Is it going to be like that forever? I don't know. I mean, there's a lot of competition for sure coming in for Shopify, but I don't know. I mean, this company, I feel like, could make a turnaround in the short term at least. Who knows long term, 10 years out. But in the short term, if they string along a couple good quarters here heading into the holidays, even afterwards, maybe they do see a little bit of a reversal. I mean, you guys got to realize, again, the stock's down 85%. I mean, it has been destroyed. All it really needs is a couple good quarters in a row, and it could spark a massive rally, even just one quarter. So watch out for Shop. Enphase is another one. And by the way, before we even get into Enphase, if you guys haven't gotten your 15 stocks for Moomoo, use that link down below or go to stocksurfest.com/Moomoo. Deposit at least $100 and you could get up to 15 stocks, each up to $2,000. And you could also get 12 stocks from Webull with any amount deposited. All those free stocks are linked down below. And just know, guys, all those links in the description box and pinned in the comment section help me out and help out the channel, and I appreciate you all as always. So let's take a look at Enphase now. And if you guys remember, I called this out probably 3-ish months ago, so it's actually been a while. We called it out after the last report. It ripped all the way to 300, 320, and now it's come back to earth a little bit. You know, we got under the moving averages. We have a death cross now, by the way, guys, and we're not really fully reversing yet. But the good thing is, look, we're still holding trend. This looks very good in my opinion. And to be honest, it was a much needed pullback. That pullback from 325 to where we are now at 250, which it's a 22% drop. It got into a bear market. And on Friday, it looks like we went up 3% on Enphase, and it did slightly close above the 50 SMA, which is good. So let's see if this continues, guys. Earnings are coming up on, it looks like Tuesday. Yeah, Tuesday after the bell. And this is a heavily growing company. And we've called it out and talked about it on the channel, and we covered it again last time they reported. And look what happened last time they reported. It went from 215 to about 300 in the coming days after that. So on average, their EPS estimate is $1.08. On revenue, they're looking to do about $610 million, which would be up 73% year over year. So they're growing heavily, guys, and this setup does not look that bad. Now, if we start breaking out of 265, 260, 270, we might be going back over 300 quicker than you think. And as always, please, guys, don't do anything based on these videos. Do your own research. These are simply my opinions. So let's go over two more, guys. Another one here, well, the second to last one is Boeing. This went up 1.6% on Friday. Not too bad. And it looks like it is slowly but surely breaking out here of both moving averages. I mean, we're above the 50, and we actually closed above the 180 SMA, which we haven't done. We haven't been above both of these moving averages since the end of, it looks like, August, very early days of September. So Boeing's looking interesting here. Looks like we're getting a little bit of some excitement before earnings coming up this week, which they're looking to do 2 cents EPS on revenue of about $18 billion, which would be up 18% roughly year over year. So watch out for Boeing, guys. They're after the bell, I think, on Wednesday, or actually before the bell on Wednesday. And if this thing continues moving past 140, I mean, again, we're slightly above the moving averages now. If we start moving past mid 140s, there could be even more upside on Boeing. Watch out for it. And the last stock, guys, and if you stuck till the end, let me know in the comments. Say stuck till the end. Drop a money emoji. Drop any emoji. Honestly, whatever you want to drop in the comments. Let me know that you stuck till the end. I appreciate you guys as always. UPS, we got to break it down because you all saw what happened with FedEx, right? They gave us some bad news. That was a while ago. I mean, not that long ago, but you guys saw what happened. That was about a month ago, a couple weeks ago, and they reported that was bad. Ever since then, they've been flat. And I think UPS did fall after that came out. Yeah, I mean, they got crushed as well, but I don't think as bad as FedEx. And they've been flat now heading into their earnings. So this is one that we all have to pay attention to. And look at this. We have an inverse head and shoulders on UPS as well. Like a lot of stocks that we've covered in this video. So keep in mind that the pattern is there. Earnings are coming up on the 25th before the market, so that's on Tuesday morning, and they're looking to do about $2.84 in EPS on revenue of $24.32 billion, which would be up about 5% year over year. Really not too bad at all, considering what is going on right now with everything in the world, which we're not going to get into in this video. But these companies, FedEx, UPS, they have not been doing well. Let's just put it that way. So let's see how it plays out, guys. Let me know in the comments what you think. And again, we could talk probably for an hour. I mean, there's no joke, 15 more companies that we could go over that are reporting. And let me know if you guys want me to make a part 2 with those companies. Let me know in the comments. We'll dive deeper into them. We'll do the chart analysis, all that good stuff. And let me just name you the companies that are also reporting. We also have Spotify, Chipotle, McDonald's, Merck, Intel, Waste Management, General Motors, Coca-Cola, Pinterest, Halliburton, General Electric, Raytheon, 3M, and a bunch of other ones. I mean, those are another, 12, and there's even more than that. I think Ford as well. I forgot to mention Ford. Crap. They're reporting earnings this week as well. Keep your eyes on them. I think they're on Wednesday. Yeah, Wednesday after the bell. So what do you guys think? Let me know in the comments. Hit that like button. Feel free to subscribe. And don't forget to get your 15 stocks from Moomoo. Use that link down below. Again, deposit at least $100, and you could get up to 15 stocks, each up to $2,000. And you could also get 12 stocks from Webull with any amount deposited. All those are linked down below. And with that being said, guys, cheers. I will catch you in the next video. Peace out.